What's good, everybody? Mo Sunday Service. We're going to be talking about how tariffs are killing stocks right now. And, more importantly, are we in a bear market? We kind of talked about this a couple of weeks ago, but we got some updated information. And as we come into the end of this month, that's really what I'm looking for, Andrew. We were just talking about, like, where are some places to enter some stocks at really good prices right now as the market has come down. Also, like, I know, like, from a volatility standpoint, we're at end of month. Actually, we're at end of quarter. And so we start to see things shift a lot, or figure out, like, what are the big hedge funds, what are they rotating into coming into the beginning of the month. So I'll probably wait until like April 1st, April 2nd to see like where the market is heading. Do we have a big sell-off on the last day of the month? I've had notoriously, we talked about this last week, some of my worst trades at the end of the month or during some periods of volatility. So I'll probably hold off until I see what everyone is rotating into for the next month. And then who am I? I'm a lawyer that happens to trade, invest in my spare time. Over the last few years, I always have a lot of my own personal money into the market, thinking about putting more into it as like the valuations of a lot of really good companies are starting to come down right now. So what is a bear market? A bear market is generally defined as like a 20% fall in the index that you're looking at, whether that's the Dow, the NASDAQ, the S&P, or the Russell, right? Pretty much negative trends and more pessimism in the market. And what are we talking about? What caused the pessimism? We're talking about cause and effect. I don't see anything else other than these tariffs. And the issue is, it's not that they're just tariffs. It's that we don't know when they're coming. We don't know when they're ending. We don't know when they're being implemented. There's no like order. Like if they would have told us like, hey, in 60 days, this is what we're doing. And it's only going to be tariffs against China, not tariffs against China, Mexico, Canada, Europe, everybody, right? And we're trying to bring manufacturing back to the U.S., but the fact of the matter is we don't have the capacity. It's probably going to take a couple of years to even get the capacity up to have manufacturing back. So what's going to happen in the near term? I think prices are going to go up for much of everything. Cars, that was the big news that came out, was the auto tariffs, but that's going to affect everyone because everyone in the U.S. drives, right? So cars are going to be more expensive, or the car companies are going to have to eat the margin, and I just don't think there's margin enough there for them to eat. So prices are going to rise. So it's almost like inflation happening again, but through government, So that's why stocks are falling, at least in the near term, right? From what we've seen, when those tariffs were announced, we saw the market turn around, right? When it was a week or so ago, he said he was going to relax some tariffs. We saw the market pop back up, right? So for me, from a scientifically objective standpoint, it seems that the tariffs are driving the market right now. So I'm just hoping he just chills out and cools down on what he's doing, or at least does some stuff a little bit more slowly. Otherwise, the market might continue to fall. And what I'm looking at right now, when everyone's scared, everyone's selling off, a lot of the stuff that I bought in my long-term accounts, I bought at decent prices. So from an overall standpoint, I'm still up from where I entered, but I'm looking at throwing some more cash into the market if we get to the bottom of some of these like really good names. I'm looking at Microsoft. I'm looking at Apple. We were just talking about Google. I'm still looking at NVIDIA. I'll even buy some more shares of NVIDIA just because I'm looking at the balance sheet of NVIDIA and what their earnings are. I know the market is falling, but I know a good company when I see one. And tech, we're talking about Eli Lilly. I'm still looking at it. Popped up for me from the level that I previously wanted, but if that gets back down to $725, I'm going to think about Eli Lilly. I love healthcare in a recession, something that I don't think is going to fall that much. Specifically, that company I've been tracking for a minute. So we talked about the stock market being like an engine. And the four pillars or the four cylinders of that engine are the Dow, the S&P 500, the Russell 2000, which are the small caps, and the NASDAQ, which is mostly tech, right? And so just looking at those pillars, starting with the S&P 500, which is pretty much a broad market index, has a lot of different parts of the market. And once again, everything nowadays is tech skewed, but the S&P 500 is probably the most broad index. If we look at what it's doing, it's trending negatively, because I see this high here, and then the next high was lower, and the lows are getting lower as well. And I think this 5,500 level is going to be a test to see if we start bouncing off of that back up. Is the S&P 500 in a bear market? No, I would say it's in a correction. I did the math. It's not quite at 20%, but it is in a correction, which is 10%. And so I think if we break that 5,500 mark, then yeah, we're going to be really heading into bear territory. And at that point in time, like, and I wouldn't say even then, like right now, I'm more on the short side from a trading standpoint. I'm more likely to short something than take something long right now. So I'm buying puts, I'm selling call spreads. A couple weeks ago, I had a decent trade on the Qs, shorting that. So that's what I'm doing in the short term. In the long term, I'm looking at levels, whether it's in an index. So I personally wouldn't buy the futures, but I'd buy some SPY. In fact, I have some SPY in my long term, some QQQ, looking at where are some prices that it might make sense to get in on the indexes long term, and or individual stocks themselves on the long term, because we're hitting 40% off all-time highs, 50% off all-time highs. My new rule is I'm not buying anything that's not at least 40% off. Looking at the NASDAQ, same thing. We're in a correction. We're not quite in a bear market, but look, we're below the 200 moving day average, and you're starting to see these lower term. This is my 21, this is my 34 day, and this is my 50 day moving average. You're starting to see these cross over the longer term averages, which is indicative of a negative trend. So while this is in a correction, I don't quite think we're in bear market territory for the NASDAQ yet. But if we start getting below like 19,000, and this is on the futures, then yeah, we could be talking about bear market territory, right? Looking at the Dow, same thing. The Dow is actually holding up better than the NASDAQ and the S&P. It's still negative, but it's holding up a little bit better, because if you look at this 200 moving day average, it's still a little closer to it. The NASDAQ, once again, has some tech in it too. It's tech heavy, just like any other sector, but it has some other things like industrials, financials, energy, and energy is actually holding up pretty well right now. So the Dow is actually not doing as bad as the NASDAQ and not as bad as the S&P 500. And we're just talking about broad indexes right now, right? What's doing the worst that I would say potentially is in a bear market, it's at like 18% off its all-time high, is the Russell. So if the Russell comes back to that 2,000 mark, yeah, Russell's in bear territory. Look at where the moving averages are. The 200 moving average is on top of the 50, of the 34, and of the 21. So yeah, and this is what's called the death cross. The 50 coming across the 200. So I think the Russell, the small caps, don't look really good right now. The regional banks don't look really good. This is the weakest thing in the market. So one cylinder of the entire stock market, one major cylinder, is in bear territory. So that's why I kind of have a negative outlook right now with these tariffs coming on and the uncertainty. But looking into April, we'll see if things reverse a little bit. And are there some stocks that are on sale right now that would make sense to start tracking to get in for the long term on a retirement account type of basis, you know? So what does this mean? I'm shorting the market and I'm bargain hunting. From a trade standpoint, like I said, buying puts, selling call spreads, and then on the Mag 7 names, the big tech names, the ones that are fundamentally sound. When I say fundamentally sound, did you go look at their earnings over the last few quarters, and are they making money? Is their top line revenue growing? Is the sector that they are in growing? Why? What does their balance sheet look like from an asset to liability ratio? Those are the things that I'm looking at. And if all of those things line up, like we were talking about Google's existential threat to me is still that DOJ monopoly case. Other than that, if you go look at how much money they're making, Google's making a ton of money every month. They're going to be able to weather any storm. So talking about hunting on that. Another threat, people think that the GPTs of the world are going to take their search revenue, but that hasn't happened yet, and I think that might be 5 to 10 years off personally, just because of user behavior, and Google just has way more data than anybody has because they've been collecting it over the last 20 years, which is why the DOJ is saying they're a monopoly, right? But on a lot of these other stocks, like I said, I'm really looking at Microsoft heavy. Lilly, I want Microsoft to fall. I want Lilly to fall. LVMH, I'm still kind of looking at. That has been falling. But just looking at some good stocks that are making some real money out there, that are really good companies in terms of how they're ran, and bargain hunt, right? While everyone else is fleeing the market, if you got some cash on the sideline where you can grab something, some cash that you don't need ideally, if you're putting something in for 5 years, that you can invest in a company of the future that's making money right now, but because the entire market is down, Trump's not going to be president forever, tariffs aren't going to be on forever. So he's got another 3 or 4 years, probably 3 years before he's a lame duck. And then the next president is probably going to take a different path, whether they're Republican or Democrat, right? They're probably going to take a different path. So in terms of the tariff situation, and so ideally stocks react a little bit better to that, right? So what am I looking at next week specifically in terms of sector, weekly stock picks? It's in the show notes. My disclaimer, this is for informational purposes only. Trading is risky. I am not a financial professional. You should direct your trades and investments to your financial professionals and do your own research. Ideally, this class helps you with that, right? What watch list am I building next week? Depending on my work schedule and situation, which is always the thing that kind of hurts me. Like last week, I should have shorted some things. I probably could have made some money just like I did the week before on the Qs. In fact, I probably could have shorted the Qs again, made the same exact trade, and made the same exact money. I'm on koifin.com. It's a free app. I go to U.S. sectors. I check off the sectors and the ETFs that I know well and what's in them. Then I map that out usually over the last 30 days to kind of figure out what's trending. As you can see, GDX and gold itself, gold has been killing. So if I'm taking anything to the upside, gold would have been your best player. My thing is, though, I think this might be exhausted. Like, look at how far this has came up. I would be hesitant, or I would be keeping a very tight stop on a trade on gold, just because I think that's where everyone else in the market is hiding out. And we're coming up to the end of the month. I wouldn't be shocked if people who have made a profit over the last month in gold start selling off to kind of collect their profits and rotate into something else. Energy is looking really good right now, specifically like the big gas companies, the refineries, ExxonMobil and Chevron. Exxon is the biggest company, but Chevron looks better, at least for me from a trend standpoint. So if I'm swinging anything to the upside next week, I probably would go energy over gold because I think it's a little less crowded. Like, this might be the one that moves next rather than gold keep going up, unless, Trump gives some other announcement on tariffs or something, then maybe people keep buying gold, right? But I like energy if there's anything to the upside. If you look at the last 30 days, this green line on my chart and the trend, it looks like a decent steady trend. So if I were going to be swinging XLE next week itself, or Chevron or ExxonMobil inside of it, I'd be looking for a substantial pullback and then hope energy keeps coming back up to the upside. On the downside, I am looking to short the Russell or KRE. I would short the Russell through IWM, which is its ETF equivalent. KRE is the regional banks. A lot of those are in the Russell too. I just showed you the Russell. It's the most negative index. It's closest to the bear market. So if I'm going to kick anything when it's down next week, it's going to be the Russell and the KRE. So if I see a pop to the upside next week on the Russell or the KRE, I'm going to be looking to buy puts, sell call spreads. SMH chips don't look really good right now, but like these have, look at the chart. It's down, but look at how sideways it's kind of been. It's been volatile. It's been like a volatile sideways, but it's been sideways. And once again, there's a lot of companies in there making real money. The main reason why these are going down is because people are afraid that there's chip curbs because of the tariffs and other restrictions that the government's going to make, so that in the NVIDIAs, TSMs, and AMDs of the world can't sell the leading chip technology to China and other countries that we don't like, right, or that we don't do business with, because if they were able to do that, their profits would be a lot higher. Tech is now XLK. This is a heavy tech. Three most heavily weighted in XLK, I believe, are Apple, Microsoft, and NVIDIA. And I like to check that from time to time. One thing that we need to talk about more is that these ETFs and the weightings don't always stay the same. Over what, I'm not sure if it's monthly or quarterly, these funds will readjust based upon what's performing and what's not, right? So XLK used to be 20% Apple, 20% Microsoft. Now it's more of a three-man race between Apple, Microsoft, and NVIDIA in terms of the most heavily weighted names, right? So from a swing trade standpoint, let's go look at Microsoft's chart. Let's see. Looking at Microsoft, yeah, I would totally short Microsoft next week. Trending negatively on a pop up. Microsoft looks good. Let me go pull up my flexible grid. Go to XLK. XLK looks good to short. Apple, you could short that. Like I said, I try to stay away from shorting NVIDIA. I could short Microsoft next week. I would stay away from shorting Broadcom, but even that looks like a good short. Look, Ange, at AMD. AMD came down, but look at its trend. Doesn't it look a little bit different than the rest of the sector? It's the strongest chip name, and the only reason why I think it's strong is because it was so exhausted to the downside. It was already 70% off its all-time high. So while a lot of these other chip names like NVIDIA, Broadcom, even Oracle to a certain extent, not extremely chip, but like chip networking, these stocks had a lot more room to fall, but AMD had already fallen so much that out of a negative XLK sector, AMD has a neutral trend and positive momentum, right? As if it had hit its bottom around here, around $95, from an AMD trade standpoint, right?
I'm hoping.
Right. No, I know, but I'm just saying, but just look at it. It looks different.
Yeah. No, it looks better than the rest.
Yep. So let's look at SMH too. Another negative sector. Same thing. Most of the chips are negative. Intel is up because people think it's going to be bought, and AMD has positive momentum and at least a neutral trend, while the rest of the sector looks mostly negative, right? But it looks like the bigger chip names, so I would still try to short next week. TSM still on my list to short. SMH itself as a ETF, I would short SMH. I try to stay away from shorting NVIDIA. I try to stay away from shorting Broadcom. I'll say it again. I looked at their earnings. I know they might come down but like they're killing earnings. They're making real money. They're growing their companies. So I think this is just more like a macroeconomic thing rather than saying anything about these individual companies, especially if you go look at AVGO, Nvidia's earnings over the last quarter, the last few quarters, they've been killing earnings. So I'm not keen on shorting them. I want to short the weakest names. I'd maybe short TSM. TSM is also a pretty strong company, but I'd short TSM and maybe SMH, but that's about it. And then AMAT too. I looked at AMAT. It has some liquidity. I don't know much about what this company does, but from a technical standpoint, it doesn't look good. So I was looking at shorting it on Friday, but we didn't have any pop that got to the level where I wanted to short it, right? But this is one of the weakest in the sector. So just looking at that nice downtrend, a pop up to one of these moving averages or to one of these levels would probably make a good short if we had a really positive day. Ideally for me, on April 1st or after, because I want to see what the market's going to do and where we're going to rotate for the next month and the next quarter, which tends to be a volatile period. So that's what I'm looking at. SMH, what else? And then, yeah, the Russell. I pretty much talked to. That's where I'm looking next week. And then even XLY again, Tesla still doesn't look good. Kind of neutral though. I might stay away from Tesla because the trend isn't as negative as maybe I think Amazon was worse. Yeah, I would rather short Amazon over Tesla next week in XLY, and then maybe the sector itself. Yeah, I would short the sector itself, Amazon. I might stay away from Tesla just because it had such a hard fall. It may be exhausted to the downside. Home Depot looks pretty bad too. They're probably going to get really wrecked by tariffs. So Home Depot would probably be a good short too. I assume they buy a whole bunch of stuff in their stores from China. So tariffs are probably going to hurt them a lot. So I would maybe look at buying puts or selling call spreads on Home Depot as well next week. Looking at we already kind of looked at the Russell. Yeah, I would short the Russell all day next week. That might be top of my list because it's the worst sector. And like I said, I wouldn't short the futures, but IWM looks just like the Russell. It's the ETF equivalent. I would totally short IWM on a pop-up next week. That's probably top of my list. And KRE too, the regional banks, top of my list to short next week. I was looking at it last week, but it didn't hit my level to short. But yeah, if it comes back up into this range at like 59 bucks, right here at this level, at this top right there, and this 34 moving average that's expressed as this chart, I would totally look at shorting it around 59 bucks on the KRE. That's what I'm looking at next week. That's it. Unless there's anything else you guys want to look at, any individual stocks. Just give you some of my levels. Microsoft, once again, I would love Microsoft to get down to about 340 bucks. That's when I'm going to think about buying it in my long-term portfolio, either from a leap standpoint or dollar cost averaging into shares. Let's look at Apple. Let's look at the big ones. If Apple comes back down to around 180, 182, 183, same thing. Nvidia, where will I start buying more Nvidia? Because I already own it around 100 bucks. So I'm looking at getting into Nvidia. So I have an alert a couple dollars ahead to maybe start buying some more shares of Nvidia. I should have something on AVGO, which I don't. AVGO looks really good. AVGO is close. Yeah, I really like AVGO. That 140 level is like amazing, but if it even gets to 160, I think about maybe getting into a leap on AVGO. Interesting. I'm gonna set an alert right now. And I just I challenge you too, go look at their earnings. Like, go look at what they're making. Like, let's go just do a quick glance. Just a Google glance. Look at their last quarter. Their net income is up 315%, right? They killed it. So for me, this is what I'm looking at. Is like looking for is divergence. A company that's making a lot of effing money, right? Mostly growth, mostly meets its expectations. The October 24 missed its revenue expectations by point, not even a percent, 0.05%. Consistently growing. Look at its beats over the last quarter. Just the income, the net profit margins are really good. The net income is really good. The revenue is up 25%. And yet we see a stock price that is down 40% off the all-time high. So that's what I'm looking at from like a divergence. A really good company that making really good money, that's in the semiconductor like networking sector, and it's 40% off the all-time high. Right, so that's something I really might have to look at that next week. I would love this 140 level. I'm definitely hopping in if I can get it below 140. But I might think about dollar cost averaging in from 160 through 140, or go look at the leaps here, right? So that's I'm glad I actually looked at that. That's what I'm looking at mostly. I'm always looking for like a good company that's at a reasonable price, right? This thing is growing incredibly. Everyone's talking about building their data centers, and one of their main things is like networking data centers. That's how AVGO makes money, Broadcom. And so as as these data centers grow, I think AVGO is going to make more money. Its position, and I just love how discounted it is right now. All right, I'm gonna look at yeah, it's below its 200. I really might look at this next week, just personally. And because I don't even want to short the thing because I just love its numbers. But yeah, just something to look at. What else? LVMHF. It's getting close to my number at 600, which I marked a few months ago, right? And the reason why it's at 600, because if you go look at, let's go look at a 5-year weekly chart. This is where the last lows were, right? And I think if you can get it at 600, and these lows right here shows that there's probably going to be some good resist or some good support right there. So I really like LVMHF. So yeah, I'm bargain hunting right now. If we get another negative day or negative week, I might start looking at getting into some stocks in the long term. Go take some of my money from my high yield interest account now that interest rates are probably going down over the next year or so. So that's going to return less money, and then maybe start putting more money in the stock market as everyone else is kind of fearful. I really want Lilly once again at 725. This is still too high for me, but this is also on my radar just in terms of things that I'm looking at. Let's go look at UNH. I like Lilly more than UNH. But UNH at that 450 level that we had talked about, Isaac, you would have done well right there.
Yeah, I see it.
Yep, that was a good level after the assassination and the shooting. But yeah, if UNH gets back down to that 450, I think that's a good buy too. But I like Lilly more than UNH, but that was a really good buy for UNH at the time. And healthcare is a safety sector. So as you see, the market's been falling. UNH has actually been positive. Right? Love that. Love to see that too. We've seen these tariffs and everything hit. I would imagine health insurance probably isn't going to get hit much by tariffs, right? Maybe some of their equipment or something like that, but they probably won't be as affected by tariffs as like some of these e-commerce giants like Amazon and whatnot, right? But look at that. While everything else has been seeing like negative reaction to the tariffs, UNH has actually been going up. So yeah, if it comes back down to 450, 450 is a really good buy for UNH. It looks like that was the bottom. That's it. That's what I'm looking at. Oh, last one. We have been talking about Google. You see my alerts at like 150, 50, and so That's kind of, and what I said previously is I'm not buying anything unless it's around 40% off now. That's my new rule. So around that 150 mark, Google would be around 40% off, approximately.
Yeah.
So that's really my entry point. Um, I'm still in some leaps, thinking about cutting them in my long term while I'm still up on them. Leave it in my daughter's account, just because I believe I wanted the shares long term anyway for her. But that's it. Something else I'm thinking about cutting. My worst thing, my worst performing in my portfolio is Elf. I got to stop on Elf. If it gets below 53 bucks, I'm out. You know, just heads of it. It looks like it might be low. Like this might be a low. This was a 5-year play, but I don't like anything being down more than 50%. That's kind of like my stop in my long-term accounts. This is kind of around hovering around that area, so I got stop auto stops there now. If it gets below 55 bucks, I'm out. I'm done. I'd rather use that cash and
Well, that's bro.
do something else with it.
Well, anyways, my friend.
Yeah. All right, that's it. Unless you guys want to look at something else.
Toast.
Short,
Good
short.
thing as usual.
Yep, short meeting this week, but just kind of wanted to give an overall, general view of the market. And the near term, it looks a little bit negative. Hopefully, he reverses himself again on some of these tariffs. And it seems to me, I'm even thinking about starting to track like Trump news on tariffs, like where if he announces new tariffs, short the market, and then once he makes a statement or something saying that he's going to relax them, then go long, and just kind of trade. And from a trading standpoint, not from a long term standpoint, but like see if I could trade the news to the upside or the downside, right? Use them as like triggers to get in and get out of trades. Like if he relaxes tariffs, get into a trade, and then when there's news that he's putting them back on, get out. So if there's any way to potentially try to time that from a news standpoint, something I might think of doing. Just because it's been moving the market more than anything else, like recently. Even like FOMC didn't move the market like these tariff announcements. So just watch the news for that. Those might be good catalyst days for some of these stocks to fall to some of the levels that we're just talking about right now. So those are the days, like if I hear some bad news, I might be looking to get in on an LVMH or a Lilly or a Microsoft, which is like the things that are on the top of my list, or AVGO, right? Those might be the catalyst days where I'm like, hey, man, maybe this is the day that Microsoft does fall past 350. But yeah, that's what we're looking at. All right, until next week, Mokama Sunday service, making it rain without the umbrellas. Yeah, watch your head out there. Because, and then from a seasonality standpoint too, usually the year after a president's elected is usually pretty bearish. And we had like some crazy growth over the last 2 years. So not every year is going to be an up year. But during some of these down years, you might really find some good assets at good prices if you're looking to hold over the next 5 years and you don't need the cash right now, meaning like it's an investment, not a trade, then you could probably get a discount on some of these good names in the next few weeks, potentially. All right, I'll see y'all later.
Peace.
Doses.
Appreciate you.